Hello everyone, thank you for joining us today and welcome to this educational presentation of knowing when the market will change directions. That's about just the question on everyone's lips these days because the market continues to go higher and higher almost each and every day. No matter when we have bad news or when there seems as there's a lot of selling pressure, it seems to recover either that very same day or the next day. As you can see here, the Dow Jones crossed the 26,000 mark just a few weeks ago. In fact, MarketWatch reported that it closed above 26,000 for the very first time ever. The market continued to skyrocket Wednesday as the Dow Jones Industrial Average surged more than 300 points to close above the 26,000 point for the first time in its 121-year history. So the markets have really taken off. And this is great if you're an investor. But as traders, you like this back and forth or ebbing and flowing of the market, a way to get in at a little lower price, type of a swing trade, or even if you're an intraday trader, you like this market moving back and forth. That's what makes up the perfect environment for trading. So as we look here at the market, we see here, this is a sample of the Dow Jones Industrial Average. It's been going straight up. And what a lot of traders are worried about is that if we do change directions, are you going to be caught holding the bag? Are you going to get in too late? Or is it the fact that you're already in the market and are you going to lose a lot of money not getting out when you could have? So this raises the question, is there a way to know when the markets will change directions? Well, remember, nothing is guaranteed in the markets. If it were guaranteed, then 99.9% of everyone trading would be a winner, would be profitable. That's not the case. But there is a high probability way of knowing when a market will change directions, and I'm going to show you that exclusively in today's educational presentation. So this promises to be a great webinar. Thanks for joining us today. If you're new to my presentations, my name is Primo. I'm the president and founder of Specialist Trading. About 8 years ago, I teamed up with Pro Trader Strategies, where all we do is present educational webinars to enlighten you and to hopefully give you a little bit more advantage because you are relying on education and fundamental things that have stood the test of time rather than relying on someone or something to tell you how to trade. I mean, think of it. Look at your own sources for deciding when you're going to buy, when you're going to sell. Do you have some special indicator that you spend thousands of dollars for, some convoluted indicator that you have no idea what it's based off, but you just use it to tell you when to buy or sell? Or maybe you join some website that costs tens of thousands of dollars that has the perfect system that tells you when to buy or sell. Or maybe you just rely on the news events or some trading guru to tell you when to buy or sell. This is the way most traders trade. They rely on something outside of themselves to tell them how to trade. And in my 40 years of trading, I couldn't think of a better recipe for disaster for trading. This is why it's been estimated that upwards of 80% of all traders fail, is because you're not trusting your own instincts. And the reason why is because they haven't been given the proper tools and education to trust their own instincts. So this is what we do at Specialist Trading. We provide you with all the tools, the tips, the information, the strategies that I've accumulated in my 40 years of trading. Now, I started out on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. A specialist just was someone who made markets in particular equity. So if you wanted to buy or sell, let's say IBM or Waste Management, two of the stocks I used to make markets in, you would go up to the trader who specialized in them. So I did that during the crash of 1987 and the bull market that followed. I've traded just about every environment you can think of, straight up markets, straight down markets, sideways markets. I've traded just about every system or strategy or technique you can think of. So in my 4 decades of experience, I know what works in terms of consistency and I know what doesn't work. So this is what we do with Specialist Trading and with Pro Trader Strategies. All of our students and members around the world in over 110 countries in every state in the United States, we simply teach you all the things that have a high level of probability for working so that ultimately you can make your own decisions based off what we've educated you on, so that you will no longer have to rely on going to a chat room to find out what to do, going to a trading room, listening to the news events. You don't need to rely on those things once you have the proper education. And this is what we're going to be doing today. In fact, I'm going to be educating you tremendously on a technique that has a high probability of knowing when the market is about to change. But before we begin, as always, we are first required by law to present this with each of our presentations. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all these examples I'm about to share with you are for educational purposes only. We are first and foremost an educational company. Now, as you're taking a brief moment to view our disclaimer, I would also like to invite each and every one of you, if you haven't done so already, to follow us on Twitter. There's our handle right there. I would suggest copying that down because we have a lot of great free information on a daily basis, anywhere from little bits of wisdom that I post on a daily basis, financial wisdom, to actual signals that our strategies have generated. We all saw what Netflix has been doing the last couple of days, been going up tremendously, and showed you some of our strategies generated buy signals weeks in advance of the great news that's come out in Netflix. So that's why we don't rely on news or rely on a lot of fundamental tools to help us, because most of the time the market is telling you what it wants to do. So there's a lot of great free information to follow us on Twitter. Now, once again, our goal is not to force feed you signals. Even though we provide them for you, they're simply benchmarks for you to learn and to apply to your own trading. So our goal is not to force feed you signals on a nightly basis, to tell you to come to our website to find out what to do the next day. That goes entirely against our philosophy. Our goal is not to tell you what the perfect time frame is. I can't tell you how many emails I get on a daily basis saying, Steve, what time frame should I trade this particular market? Or what do you think of this particular stock or this particular future or currency pair? That's not our goal. We're not trying to tell you how to trade. We're trying to teach you how to trade so that you can be in charge of your own trading destiny. This is the same format and philosophy and the same concepts that were taught to me 40 years ago that have helped sustain my trading for 4 decades. And hopefully the same things that I teach all my students around the world will be able to sustain you as well. Okay, so this is going to be an educational presentation, and with all educational presentations, we encourage you to ask questions so you can learn. But please, since we have a good group here today, we don't want to be here too long and take all of your day answering questions. So if you could kindly wait till the last portion of today's class, I promise I will get to each and every one of them to ask your questions. So we're a little bit different from other presenters. I know they like to stop at each slide and answer any questions, but if we do that, we'll be here far too long and take all of your day. So just wait till the last 15 minutes. The only question I will answer is the most popular one, and that is this being recorded? Yes, it is. So if you have to leave early, or if you have a big trade happening, you can't concentrate on 2 things, I understand. Or if you're having technical issues, oftentimes if you log off and then log back on again, the problem will be resolved. But if you can't resolve it, don't worry. We will send you a link to this recording. Pro Trader Strategies will, my sister site. Okay, so please hold off at the very end of today's class to ask any questions. Okay, so let's begin with today's class. These are the tools required for this particular technique I'm going to be sharing with you today. First of all, we need to look at weekly bars, and it doesn't matter what market we're looking at. I'm going to focus mainly on stocks today, but it wouldn't matter if we're looking at currency pairs. It would not matter if we're looking at futures. It wouldn't matter if we're looking at the Bitcoin or if we're looking at commodities. This technique can work in all markets, okay? But we want to focus on weekly bars because we're looking for a major or a semi-major trend change. And that's why, if we look at 15-minute bars or a daily bar, that's not enough. We need a little longer time frame. So this can only be applied with weekly bars. And then secondly, we need to apply this technique, which is the PET D. In order to work, we need to have the PET D. You've heard me speak about this before. If you're not familiar with this, this is the best tool I have ever worked with in my 4 decades of trading that can tell me what the trend is. Why? Because it's translating on a tick-by-tick basis what the market wants to do. It's a directional trend tool, but really the best way to define it is as an interpreter. It's interpreting on a tick-by-tick basis what the market wants to do. It does not tell you how high the market will go. It does not tell you how low the market will go. It simply translates what the market wants to do at that moment. Now, the beauty of this is that it's all going to be presented to you on our new platform. This is the PTS Primo charting platform. Now, you can apply this on any platform you like. The PET D as well as weekly bars can be applied on any platform. But you're going to see how simple it is because remember, we're an educational company and our platform was strictly designed to teach traders how to trade. Okay, so let's look at this example here. This is an old example in Aetna now. As we can see, this is the way most traders find out what a trend is. They usually find out that we're in an uptrend and they say, okay, this looks like it's good enough to buy. And then right when they get in, look what happens, okay? Well, with our platform, it's as simple as just clicking on the Pet D tab right here. And as you can see, once you do that, the colors change, all right? So here's the beauty. When you have a green upward bias on all the colors of the bars, that means you're in an uptrend. A red bias means you're in the downtrend. Now, the beauty of the Pet D is that, as you see here, it tells you which direction you should be trading. So you can apply any method, any strategy you'd like to that direction. It doesn't matter if it's one of mine, one of yours, another educator. If you see a preponderance of green bars, then you should only be applying a buy strategy. If you see a lot of red bars, you should only be applying a sell strategy. So this is a common way in which to use it. But we've also found a dozen other ways to apply the Pet D, because the Pet D may also tell you when an uptrend has concluded. So this is what we're going to focus on today. This is the technique I'm going to be sharing with you and show you how simple it is once you apply the Pet D on weekly bars, okay? All right, so let's look at this chart of Apple. This is a weekly chart of Apple, and as you can see here, it was kind of going up. But then we went into this kind of sideways mode where it looked like, well, we're not going to really be doing much, but maybe this is support. There's a lot of buyers here. The institutions like this. So it looks like we got a nice support going here. So we click on the Pet D to see whether that is support or not. And we see here that we had a lot of green bars, but then we're met with some red bars right here. Here's a red bar. Here's another one. Here's two. Then a green bar. Then another red bar. Well, here's the technique I want to share with you. Once you see that you have a red bar with the Pet D, you want to see that it's a short-term high. Now, obviously, this was not a high because it was, after higher green bars. These two were not highs because there were green bars higher. But look at this last one, okay? Look at the high, and when we say high, we're talking about the high of the bar. We're not talking about the high of the open or the close. We're talking about the extreme high or the range high. And what we want to make sure is that it's the highest high or equal to the highest of the last 5 bars. Now, a lot of people get confused with this countdown, but it's very simple. Here's the way you would look at it. Once you find that red bar, you count that bar as number 5, okay? And you simply count back 4, 3, 2, 1. All right, now this is the high of bar 5. Are these other bars equal to or higher? No. So this bar, the red Pet D bar, is the highest. So what is that telling us? That is telling us, the market is telling us, whatever we're looking at on a weekly basis, that this has a high probability of being some type of top because it was the highest of the last 5 bars, but the Pet D colored it red, meaning that it was not confirmed, that that should be in a downtrend. And then look what happened to Apple this past couple of years. It went down 29% right after that. Okay? So that's the technique. Let's look at some more examples, and we'll go through the countdown once again to show you how simple it is. Remember, you can apply this on any platform. It doesn't matter if you're using TradeStation, Metastock, MT4, but we're showing you how simple it is to apply with our new PTS Primo charts because it's one click away. All right, here's the IBM weekly chart. And once again, these charts are going to be older because, as you've known, for the last 2 years, we've been going straight up. So some of these charts will be, a month or a week old. Some may be like 2 years old. It all depends on the specific market we're looking at. Now we're looking at a weekly chart of IBM going back a couple of years, obviously. All right, it looks like it's kind of going sideways. Let's see what the Pet D is telling us. You'd simply click on the Pet D tab, and we had a nice amount of green bars, and then we start to have some red. Now, as we see the red here, none of these are the highest high. In fact, the bars before it are higher. So we can't look at these as any type of top. But now we have a bar right here. And so we want to see and look and see what the extreme high range of that is right here. You can draw a little line, but we've done it here for educational purposes. And that is bar number 5. All right, so you count back 5 bars, 5, 4, 3, 2, 1. And it is the highest of the last 5 bars. All right, now if we had a bar that was equal to that, that would still be okay. It would still count as a high. So right now, what is the Pet D telling us? It's telling us, it's translating that the market may have picked the top here. because it made a short-term high and it colored it red. So you have a downtrend by making a high. So that's a divergence right there. So you want to use that as some type of selling technique. Now, if you're long IBM, you could do many things. You could move your stop up. Maybe you could sell half your position, move your stop up a little tighter, or maybe sell everything altogether. And if you're a more aggressive trader, you could use this to go short IBM, because when this was signaled, the stock fell over 25% in the next 6 months, okay? How would you like to have lost 25% of your value in like 6 months? And this gave you a great warning. MANH, this is MANH on a weekly basis. Looking at this, someone would say, well, this is going straight up, but I see what you're saying here, Steve. We made a top here. Now, I don't really need the PET D because look at, I can tell that this is most likely going to be a red bar. So I would just sell here. This is why you need the PET D, because once you apply it, that's not a red bar. So you wouldn't sell this stock. All right, the stock is still in a short-term uptrend. So this is how most people lose, thinking they can outguess the PET D. The PET D is a great translator. So we go forward a couple more weeks, maybe a month, and then finally we have a bar that does turn red. Now we count the high of that along with the the 5 bars looking backwards, and bar number 4 is, I believe, equal to the height of bar number 5. So that's okay as long as it's equal to or higher than any other bar, the last 5 bars. That's telling you most likely the trend is going to change. And as we can see, the stock fell 38% in the next 2 to 3 months. Wouldn't you have liked to know to get out of that by using this simple tool? How about FAST, F-A-S-T? Here's a weekly chart of FAST. It's been going up. We apply the PET D, and guess what? We've been going up, and the highest high out of all these is a red bar. If we take the high of this extreme range here, we count back 5 bars. Obviously, it's the highest high of the last 5 bars. Remember, the red bar should be bar number 5, and there should be no bar higher than that. As we can see, none of these previous 4 bars were higher than it. So that's the market telling you you should get out or move your stop up, or if you're more aggressive, you want to go short, because FAST lost 20% in the next 6 months. Okay, you would have lost 20% of the value of your account there because if you were holding long FAST. Let's look at CTL. Now, someone looking at this will say, well, Steve, this is basically going sideways. This is a high-level consolidation. I like this stock. There's a lot of interest in it. The earnings are going to come out. They're going to be great. I like the new CEO. Why would I want to sell this? Well, do you see how all the justifications and reasons I were holding on to this stock were based on outside sources, a CEO, institutional interest, earnings? They're not based on what the stock is telling me. What is the stock telling me? Well, in order to translate what it's telling you, you have to apply the PET D. And the PET D is telling you, well, we're starting to have a little splash of red here. Now, if we look at this bar right here, we see that, well, Steve, isn't this the top? Well, if we look at the top here, we had bar number 1 higher. So this does not qualify. So you would not have sold even though it was a red bar. But about a month later, what do we have? We have another red bar that is equal to or higher than the preceding 4 bars, okay? So this is telling you, okay, well, where you may have jumped the gun a little bit right here, if you waited another month, now the market was confirming that there's a high probability we're most likely changing directions. If you're long CTL, now's the time either to exit or maybe just to move your stop up or to go short. And as you can see, coming into the next 6 to 10 months, the stock fell almost 40%. Let's look at letter C. This is a weekly chart once again. Now here it looked as if it was going much lower, but then it started to bounce back up. So someone would say, well, Steve, it just bounced. It made a nice bottom here. Why would you think to sell this? Well, because we only listen to the market. The market tells you what it wants to do, not some guy in a chat room, not some guy on TV that thinks he knows everything, not even some guy in a webinar. Don't ever listen to outside sources. Listen to what the market tells you. So if we apply the PET D, what is the market telling us? It's telling us that it just made a high right here with a red bar, and if you take the high of that bar and count back 5, it is the highest of the last 5 bars. So that's telling you that there's a high probability there is a trend change about to happen. The market may be thinking about going the opposite direction. So you want to protect yourself. And the stock fell 35% in the next 3 months. Nike, okay, weekly chart of Nike. Nike was going straight up, all right, looks really good. Why would anyone think of selling this? Because you're listening to the market. If you look here, we have some red bars appearing, but we see here this first red bar wasn't the highest of the last 5 bars. The second one wasn't the highest because these bars were higher. But look at the last one. It's the highest of the last 5 bars. We take the extreme high, you can draw a little line there, and count back 5, 4, 3, 2, 1. It was the highest of the last 5 bars. So Nike in 2016, the beginning of January 2016, just a couple of years ago, was saying, sell me, get out. You may want to protect yourself. And the stock fell nearly 20% in the next 6 to 10 months. If we look at Yelp here, same thing, but all of a sudden we have a deep, dark black bar to the side. Is the market telling us that to the downside here that this is a confirmation? Yes, it was. And it was the highest of the last 5 bars. So even though it was a very sharp downward move, it's still a warning. It's not saying that, well, we've gone down far enough, maybe time to buy on this nice little bounce here. It's just saying, you know what, the trend is about to change. Most likely, there's a high coincidence here that we may be going lower, and the stock fell 63% in the next year. If we look at HOG, H-O-G, now this is going up. Someone would say, why would you sell this? Well, what is the market telling you? Not the earnings, not some guy in a trading room, not some convoluted indicator. What is the translation from the market telling us? We apply the PET D, and we see here we have a red bar. If we draw a line from the top and count back 5, 4, 3, 2, 1, it's the highest of the last 5 bars. So the market is telling us you may want to get out of HOG because in the next 8 months it dropped a quarter of its value. It lost a quarter, 25% of its value. Let's look at S weekly, all right? Same thing, going straight up. Now we have a large dark bar to the downside, meaning that we closed lower for that week. But as you've seen before, many times when you apply the PET D still colors it green. So it's telling you that it's okay to be in the stock, but let's see what the PET D translated. The PET D did translate this as a red bar, telling you that if it's the highest of the last 5 bars, let's count back 5, 4, 3, 2, 1. Obviously, it is the highest of the last 5 bars, so it's giving you a great warning to get out. And as you can see later on, in the coming months, the stock fell nearly 50%, 47%, almost lost half of its value in the next 8 months. You see how the market, not guaranteed, but many times will tell you in advance what it wants to do. The only trouble, you're always left holding the bag or saying, boy, why did I get in so late? Or why did I not sell? Or why didn't I just sell half of my position? It's because you're listening to some guy on TV, you're listening to your friend down the street, you're not listening to the market. The market's always trying to tell you what it wants to do. It's your best friend. It's not something you have to compete against. It's your best friend. So why not listen to that instead of someone else? Let's look at that Apple chart again. Okay, we're looking at Apple going back to December of 2017. We see here that, well, we're kind of going sideways. Maybe we're making a top, maybe we're making a bottom. It's hard to see here because for the past month, we're basically just kind of going sideways. Now, this is a daily chart, okay, just to let you know. Or I'm sorry, this is actually DUK, okay? If we look at this, we see that we're going sideways. We are the highest high of the last 5 bars. And it lost 14%. So you can look at this on a daily time frame, but remember, if you're trying to find out what something is happening on the longer term, this is where I would really strongly suggest looking at weekly bars. So even though it can work on a daily, this is DUK on a daily basis, I would strongly suggest it more on a weekly time frame. Now, a lot of people say, well, Steve, I invest in ETFs. I'm more of looking at indices. I'm not concerned with daily stocks or other markets. Okay, let's look at a weekly chart of the SPX. All right, that's the index for the S&P 500. This is a weekly chart, all right? Now, the only thing that's different about this is look at the year at the very bottom of the PTS Primo charts. This is May of 2008. Do you all remember what happened in 2008? The market had already topped out, and a lot of people thought it was bottoming and that we were kind of making some type of support. We had a really strong move to the downside, but that was just a flush out or some type of pullback, and now it's time to go back up. So a lot of people were thinking, okay, I got hurt a little bit, but now I'm going to get back in the market. Now it's time to make those new highs, just as we were doing earlier. This was in May of 2008, 10 years ago. What was the market telling you? Well, if we apply the PET D, all you have to do is click on PET D on our green strategy tab tool here, and we see here that we started to make highs. This was the highest high of the last 5 bars. And we all know what happened going into 2009. The market dropped 35%. So you can use this as a directional tool just to tell you what the market wants to do. So let's recap before we show you what we have a great offer for you today. I shared with you a simple but high probability technique for knowing when the market will change directions. Now, is it guaranteed? Absolutely not. Nothing is guaranteed in the market. But as someone who has been trading for 4 decades, you don't need a guarantee to make you successful and make you profitable. You just need an edge. That's all you need. Do you know that the casino owners, I believe, their edge is less than 5% with all of the gaming, different games and different ways of gambling in the casinos. It's 5% or less, but still they make millions and billions of dollars every year. Why? Because they have that edge. So that's all you need. And the PET D is a tremendous edge to have in your favor. So let me ask you, do you think this technique can help you once the market finally does decide to change direction? Now we've seen excuse me. Now, we started this presentation about a half hour ago. Right before we began, the market was selling off. It was starting to sell off. Wouldn't you like to know if by the end of this week we have a red bar because we've gone up and made highs in the indices? Wouldn't you like to know if we continue to sell off today, tomorrow, Friday, if that bar is red? Don't you think you would like to have that clue to know that, uh-oh, I think we may have seen a trend change right here? Well, here's the great offer we're going to have for all of the people today in attendance. This is our great special discount. It's the PET D, our roadmap for any market. Now, I just showed you one of the great ways you can apply the PET D. There are literally dozens of ways. You can use it as a signal confirmation tool. You can use it as a pullback or a continuation trading technique. You can use it for stop loss placement. Okay, there's a lot of different ways to apply it. This all comes within the course. This includes the add-ons too. So for whatever platform you have, TradeStation, Metastock, MT4, NinjaTrader, Thinkorswim, you can apply and use different things to applying the PET D with to change the colors automatically. Included with this comes mentoring correspondence. So you can ask me questions anytime you like on ways to apply the PET D. But here's one thing I know a lot of people are saying. They say, well, okay, I kind of get this technique. So if we make a higher high and then the next bar closes way lower, why do I need the PET D? Okay, I mean, there's just really no reason for me to purchase this because I kind of get the concept now. I'll look for the markets or whatever I'm trading to make a higher high the last 5 bars, and then it's going to close real lower. So I don't need the PET D, right? Well, please do not try this without the PET D. Let me show you why. Let's look at a weekly chart of the Dow Jones Industrials starting in November of last year, okay, or 22 years ago, 2016. As we can see, the market was going higher. Let's say you thought that this was going to be a PET D red bar. So you say, you know, I don't need that. I can sell here, all right? And what would have happened if you sold? Well, we all know the markets have gone much, much higher. So you lick your wounds, you lost some money, you say, you know what? In August of last year, here's where we have a new high, and look at that big down bar. It looks like a bearish engulfing pattern. It's the highest of the last 5 bars. I was a little bit too early. This is where I want to sell. So now I'm going to make back all the money I lost in the first one. So now you sell here. And, well, coming into this month, we all know what the market has done, okay? This is why we say you need the PET D, and this is why it's so much easier with our platform. If you have a platform, all you have to do is click on PET D, And guess what? You would have found out in advance that all the bars were green. So there's no way you should have been selling. You would have made a lot of money by holding on to your cash, by simply not losing any money, okay? That's sometimes the best trades are the ones you don't take. So not to say that you would have made a lot of money, you would have not have lost any money because you wouldn't have gotten in too early. But wouldn't you like to know when that first red bar is about to appear? Now, we're not going to stop here with this offer. We're also going to throw in our PTS Primo charts, all right? This comes with a full-fledged trading strategy. Strategy number one, a great pullback strategy that you can apply with the PET D. We're also going to give you short-term trend identifiers. We're also throwing in 2 entry techniques. You can apply this to any strategy or technique to increase your odds for a better entry. We're also throwing in a signal scanner, which I'll talk about in just a few minutes. Over 90 technical indicators are available if you'd like to use other indicators. We're also throwing in Bloomberg TV. There's a special page. All you have to click on is our media page that automatically shows you live Bloomberg TV, all the economic reports and fundamental news if you're interested in that. This also comes with personalized tech support. Now let me share with you what I'm really proud of. It took me over a year to develop this with Pro Trader Strategies. That's why we call it the PTS Primo chart. I'm really happy about what we put together with our scanner because I have a pet peeve with a lot of scanners. I've traded with just about every platform you can think of, and most of them are so complicated, especially when you're trying to get a nightly scanner to see what the signals are for the next day. Let me show you how simple it is on our new platform. All you have to do is open up the scanners page. You'll get a blank page like this. Click on load symbols. We provide you with different lists and baskets of stocks from anywhere from NASDAQ 100, top ETFs, currency pairs, and whatever one you decide to choose, it will automatically appear in a matter of seconds. Once that list appears, you click on scan, and in probably about 10 seconds, you have a series of green and red bars on the far right. The green bars simply mean that that's a buy signal in the corresponding stock. The red bars mean that that's a sell signal. This entire process takes about less than 30 seconds to do on a nightly basis. That's how simple it is. And all you have to do is double click on either the green or the red bars and the charts will appear with the arrows telling you where those buy signals are. So this is so simple. It's so easy. We're throwing this in with PET D special. You're getting the PET D plus 6 months of PTS Primo charts free. Remember that comes with a strategy, a great pullback strategy, different tools for telling the markets, the media page for Bloomberg Live TV, plus our scanner. You can scan on a nightly basis with the PET D, okay? A great, great offer. Here's the special offer we have. It's $29.95 with 6 months of the platform, but we're also including payment plan. So if you can't come up with one lump sum of $29.95, don't worry. You can establish a small deposit and still be up and running in a matter of moments. So you don't have to have that full amount to be able to apply the PET D. Remember, if you want to have a great idea of knowing when the market's trend is about to change, you need to have the PET D. Don't try this without it. The beauty is it's so simple along with our PTS Primo charting platform. It's all right there for you. One click away. And we're offering you payment plans for a limited time. So you can just put down a small deposit and be up and running today if you'd like. So here's how to take advantage of this great offer. Contact my sister site, Pro Trader Strategies. They handle all of our courses plus the platform discounts. You can email them at the email address there provided, or I would suggest calling them at 310-598-6677, because if you'd like to get a payment plan, which I would recommend, you don't have to put down the one lump sum. You can you simply give a small deposit and you'll be up and running. They can work it out with you to meet your needs. So they can put an individual payment plan structure together for you. There's no obligation. You can call them up, ask them more questions about the platform if you'd like. Now, if you're ready to sign up with that $29.95 deal, all you have to do is simply click on the link at the very bottom. But that's not a live link, but the live link is posted in the chat box on the far right. So all you have to do is click on that on the chat box, and it will automatically send you to that informational sign-up page for $29.95, okay? And remember, that is lifetime. A lot of people are always saying, well, Steve, what happens when you upgrade the PET D like every couple of years, like so many other websites do? Their indicators are upgraded or specialized, or they're formatted to change to the market environment. There's no upgrades in the PET-D. It's the same thing I have been using for the last 40 years. So the market environment has changed tremendously with the volume, with the volatility. The PET-D has stayed the same. So that's the beauty of it. We have no plans to upgrade it. We have no plans. It is yours for life, okay? So don't worry about you buy something and then 2 years later you got to spend. This is not the Apple iPhone. We're not going to do that to you. It's the same thing I've been using for 40 years, okay? So this is a great offer. I'm going to leave this information up here while I open up the question and answer box. Thanks for holding off on any questions. Let's see, the first question I get is, Steve, what will be the setup in case the trend change is to the upside? Thank you. Well, that's a different webinar because so far we've been going straight up. And conversely, it would be the same thing, but with a small minor, I don't want to get into the rules too much. There's a couple of small changes. You want to look for a green bar, obviously, in the PET-D, but there are a few different things to look for when a bottom has been made. And there are different ways. We've talked about that in other webinars, but I just want to focus on the top now because look back at any chart, and I don't care what you're looking at. It could be currency pairs, it could be the E-mini futures, but mainly stocks and the stock market indices. They've been going straight up. And a lot of people are worried that they're missing the boat. They don't want to get in too late, like what happened with Bitcoin. And the minute you get in, it goes straight down. So there's ways to help you either to determine if you're already in. The PET-D can tell you and give you some type of knowledge as to maybe it's going to change the trend. And it will do the same thing with the bottom, but we're not looking at bottoms now because there aren't a lot of bottoms being created. So I'll talk about that when we have a really strong and significant sell-off. That'll be the webinar I'll give on knowing when the market is about to tell you when a bottom is in place. It's just a little bit more complicated with a few different changes. Picking tops is a lot easier because mostly people aren't looking for this. They're looking for, I'm looking for a reversal, but they're looking off of a pattern just off of the price and looking for a divergence with the stock and some indicator. And trust me, people, I've traded just about everything. I've been trading for 40 years. There is no divergence that has the level of consistency. There is no volume that has the level of consistency than the PET-D. The PET-D is the best tool I've used that's helped me determine things like this, and I use it on a daily basis going back 40 years. So this is why I teach it to all my students. If there was something that showed me how great a volume indicator was or how great a divergence tool was, then I would teach that, but I haven't found anything. So why would I want to give that to my students when I personally wouldn't use it in my own trading? So that's why I really strongly believe in the PET-D, and that's why we want to share it with you, okay? A lot of people are saying, well, Steve, can we use this with another indicator? You can, but one of our main concepts, our philosophy, is to keep things as simple as possible. And I can't think of a simpler way. You notice that we're not using anything else. All we're using is the PET-D and that countback. That's it. That's how simple it is to get in tune or in sync with the market. You don't have to overcomplicate your trading. So the question here was, can we use it with other? Sure you can. Remember, once again, it's not our job to tell you how to trade. We're just trying to feed you these things that have really stood the test of time. But how you decide to apply them is up to you. My only recommendation is not to put too many things on your trading plan because you'll muddy the water. Then you kind of lose, you can't see the forest through the trees. And as traders, we love to put more and more things on a trading plate because we think that that makes it more valid. But it's actually the opposite. It's been my experience that the less rules, the less complicated method you have, the more its validity in terms of being consistent. So keep things simple. You see how simple this was. The only thing is you need the PET-D. I showed you that example with the Dow Jones, how if you had thought that they had made a top there because you had a nice reversal day, but once you applied the PET-D, those bars remained green, okay? Another question here, can we use moving averages to detect this? We have a moving average called a buy-sell line. It's simply the 50-period moving average. That's not applicable in this particular method, in this particular method, because obviously everything's going to be above the 50-period moving average. And this is not a trading system or strategy per se. It's just a tool to tell you when the trend is changing. All right, so I'm not telling you to automatically go short when you see this first red bar. I'm just telling you that it's giving you a warning as to what you might want to do if you're already in the market well, then you may want to sell a portion of your position, move your stop up, or if you're an aggressive trader, you might want to look for selling opportunities. But we just shared with you all of these different markets and stocks and indices that lost anywhere from 20 to 60% of their value in the next year. Wouldn't you like to have a tool that gave you a fair warning of that? That's what the PETD can do, okay? So as we close here, I just want to say thank you for attending. This is a great tool. I use it on a daily basis. In fact, I have been using it on a daily basis upwards of 40 years now. And you're going to be darn sure I'm looking at it for the top of this market myself. Wouldn't you like to know along with me if there's a high probability for a topping action happening? All right. You can if you become a member of this course. Trust me, a year from today, you will have wished you became a member of this course, and you'll have 6 months free of the PTS charting platform. I'm so excited about this because I developed it for the past year with Pro Trader Strategies. It's everything I've accumulated in my 40 years of trading put in one educational platform. So please join me along with the platform users that already have signed up in trading the markets and in using the PETD. Thank you so much for attending. There's the link below. Give Pro Trader Strategies a call. You can set up a applicable trading plan by just putting down a small deposit, and you'll be up and running very soon. Thanks so much for joining us today. I really hope you become students of our course, and I hope you become students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.